equity markets across the region finished 2019 on an upbeat note. Global sentiment was boosted following the decisive UK election result, supporting an expeditious timeline for Brexit and the finalisation of a Phase 1 trade agreement between China and the United States. Whilst returns across the region remained disparate, with only Taiwan and China outperforming the benchmark, the aggregate total return for 2019 of 18.2% in US dollar terms was very respectable. This is in sharp contrast to where markets sat in August, when the region was posting a year-to-date and rolling 12-month return of 4% and minus 6.3% respectively. Despite improved sentiment, the Asia ex-Japan region underperformed global equities over 2019. Indeed, over the last decade, annualised returns from Asia have on average been just over half that of the All-Country World Index at 6.3% per annum, and less than half of the return posted by US equities of 13.6% per annum. If, as the prevailing narrative suggests, that the 21st century will belong to Asia, the second decade has not gone to script, at least from a capital markets perspective. Notwithstanding the myriad of ongoing macro and political challenges that have confronted markets across Asia and the globe in recent times, ultimately it is the business cycle and its resultant earnings trajectory that will dictate much of the performance of markets. As we enter 2020, the earnings outlook for Asia is improving, with consensus earnings per share growth for Asia forecast at around 14% versus 10% for the United States. However, as shown in the chart, the valuation divergence between the two regions has expanded significantly in recent years. US shares have benefited from strong earnings growth, but it's been supercharged by record levels of buybacks, which have in part been debt funded, further assisted by declining interest rates, leading to lower interest costs. The mature nature of the US earnings cycle and corresponding record operating margins, coupled with a relatively stretched balance sheet position, adds further conviction to our stance that the risk-reward framework augurs strongly in favour of Asian markets on a forward-looking basis. Whilst 2019 was a positive year for absolute returns, it was a somewhat disappointing one for relative portfolio performance. Indeed, 2019 caps what has largely been a difficult decade for value investing, not just across Asia, but around the globe. Although we have witnessed some encouraging signs of rotation in recent months, markets typically remain bifurcated in terms of their wide valuation spreads and the extraordinary performance of a narrow group of extremely expensive stocks. As we enter a new decade, the temptation amongst most market pundits is to stick with the winning formula of recent years. As value investors focused on preserving capital as well as growing it, our conviction remains firmly that the drivers of prospective returns likely to be delivered across Asia may ultimately look very different to those of the past.